This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
So, 21. What was the total value of 2,000 units transferred to the finished goods warehouse last month? So it's a process costing question. And where are we? A company which operates a process costing system had work in progress at the start of last month of 300 units, valued at 1710, which was 60% complete in respect of all costs. Last month, a total of 2,000 units were completed and transferred to the finished goods warehouse. The cost per equivalent unit for costs arising last month was $10, and the company uses FIFO, the first in, first out method of cost allocation. What was the total value of the 2,000 units transferred to the finished goods warehouse? We finished 2,000. Well, the first 300 that we finished would be the work in progress brought forward. There were 300 units already in progress. So the first thing we did was finish them. And how much did they cost? Well, the cost that had already been spent was $17.10 per the question. But that had only been spent doing the first 60%. And so this month we had to finish them. There was more cost. So the cost of finishing them, there were 300 units. We had to do the remaining 40% of the work. So 40% of this month's cost equivalent unit, $10. So the cost of doing the remaining 40% work is 300, 40%, 10, 1,200. So the first 300 units that left had cost $2,910. What about the remainder? Well, remember there were 2,000 finished in total. So the remainder, the other 1,700 units, they must all have been completed this month. And this month's cost, again, $10 a unit, 17,000. So the total cost for the 2,000, 19,910, which is A. Question 22. A manufacturing company operates a standard absorption costing system. Last month, 25,000 production hours were budgeted. The fixed production cost was $125,000. Last month, the actual hours worked were 24,000. And the standard hours of actual production were 27,000. Well, this really is one that you've got to have learnt the rules. Otherwise, it ends up being little more than a guess. You've got to learn the rules. People learn the rules in different ways. There's obviously only one right answer. I'll do it the way I do it in the lectures. But for the capacity variance, you compare the actual hours worked. How many hours did we work? 24,000. You compare it with the original budget hours. How many hours did we budget on having available? Second sentence, last month 25,000 production hours were budgeted. So this is comparing the capacity. We expected to get 25,000. We only got 24,000. So 1,000 hours less than we expected. We need to cost it out, of course. We cost it out at the fixed overheads per hour. well, the standard cost per hour, and the standard cost will be from the original budget. The standard cost, we'd budgeted 125,000 for fixed overheads for 25,000 hours at $5 per hour. So the variance is 5,000. The only bit remaining, of course, and they always do this, they give them both options, favourable, adverse. Which way round is it? Well, again, the way I always remember it. We thought we'd get 25,000 hours. We got fewer hours, and with fewer hours available, that'll mean we can only produce fewer units. Producing fewer units is bad. You know, if we can produce more, it's good. Produce less, it's bad. It's bad, it's therefore adverse. The answer is A, 5,000 adverse. 23. The following steps have been made about value analysis. Well, this is very much a sort of learn it or guess. But those statements which is or are true. Value analysis, it seeks the lowest cost method of achieving a desired function. Yes, that's what basically value analysis is. 2, it always results in inferior products. No, not at all. 3, it ignores esteem value. No. The answer is 1 only. The answer is A. Uh, 24. Under which of the following labour remuneration methods will direct labour cost always be a variable cost? Well, it's really a question of a terminology. If you're happy with the words, it's obvious. For it to be a variable cost, it would have to be, you know, that if 1 unit's $10, 2 units is 20, 3 units is 30, and so on. Well, that is piece rate. Piece rate is where the workers are getting paid per unit. A day rate, if they're getting a fixed price per day, could be the same per day, whether they're producing more or less. It wouldn't be variable. Differential piece rate, it's where you've got different rates depending on how many you produce. That wouldn't work. And a group bonus scheme, no. It's a piece rate where it would always be directly variable. 25. Now, this is one which upsets so many people. Which of the following combination of profits and losses for the 2 months is consistent with the above data? And before we look at the above data, see what they've given us. They've given us the profit or loss for 2 months. The first 2 columns are the absorption costing profit or loss for month 1, month 2. The other 2 columns are for the same 2 months, what the marginal costing profit or loss, what it would be if we did it using marginal. If we go back, the manufacturer and sell a single product in 2 consecutive months, the following levels of production and sales occur. So sales and production each month. The opening inventory for month 1 was 400. Profit and losses are being calculated for each month using both. Well, what is so tempting and what most people want to do, it would seem obvious, let's try and calculate the profits for each month under both ways and see which is the right answer. Well, that in fact is impossible. There is not enough information. You know, we're told sales and production, but you're not told selling prices, you're not told costs. We cannot possibly calculate the profits. But look again at the question. It doesn't ask us which of those profits and losses is correct. It says which is consistent, which fits in, which is possible. And what they're getting at is this. I think I mentioned in one of the earlier questions that you should be aware if inventory increases over a period, absorption gives the higher profit. And what I didn't write down before, but I did say, now the opposite applies. If inventory decreases over a period, then it should make sense. Marginal gives the higher profit. Look at the information. In month 1, whoops, we sold 3,800, we produced 3,900. Well, if you produce more than you sell, it means inventory increases, and therefore absorption should be higher. Look at the choices. Just at month 1 columns. A, absorption is 200. Profit, marginal is a loss. Well, absorption is higher. So A works for month 1. B doesn't. Month 1 a loss, absorption, marginal a profit. So B doesn't work. But C works. Again, in month 1, absorption is higher, there's a profit, than marginal, which is a loss. D doesn't work. So it's A or C because of month 1. So we need to look at month 2. Month 2, we sold 4,400, we only produced 4,200. And so in month 2, the inventory decreases, and therefore marginal will be the higher profit. And so remember, it's A or C, so I won't waste time on the others. But A, month 2, absorption is 4,4, margin is 3,2, absorption's higher. It's not A. It must be C, but let's check. We already know in month 1, absorption was higher. That was okay. In month 2, 3,2 and 4,4, marginal's higher. The only one that's possible is C. So it's a clever question, but there is that danger, understandably. A lot of people waste a lot of time trying to think of a way of calculating those profits. There isn't enough information. And look for the word. Consistent doesn't mean calculate. It just means which are possible, given the information. All right, let's carry on with number 26. The following statements relate to the advantages that linear regression analysis has over the high-low method in the analysis of cost behaviour. So if you remember, they're both methods of trying to sort out the variable cost and the fixed cost. High-low, very quick. Regression, a bit more complicated. Which of those statements are true? Number 1, the reliability of the analysis can be statistically tested. Yes. Yes, we can test it. You should have heard of the coefficient of correlation, which measures, how reliable it is. The nearer the coefficient is to 1, the more linear it is, the better answers we've got. Number 2, it takes into account all of the data. Yes, high-low only takes the highest and the lowest. Regression, we look at all the data. 3, it assumes linear cost behaviour. Well, it does, the final answer, but it's not an advantage of it, because both high-low and regression are effectively assuming it is linear. So be careful that you've read it properly. It's looking at the following statement's advantages. 3 isn't an advantage of one against the other. So it's 1 and 2. The answer is B. 27. What was the percentage degree of completion of the closing work in progress? So it's obvious what topic it is. A company operates a process in which no losses are incurred. The process account for last month, when there was no opening work in progress, was as follows. So fairly conventional on the left. The debit side got the costs, you got the finished output, and the closing work in progress, of which there were 4,000 units. And it was complete to the same degree for all elements of cost. What was the percentage degree of completion? Well, if you understand process cost, actually, this is, even though it's a little bit unusual, it should be quite straightforward. Because since there was no opening work in progress, to get the full cost per unit this month, well, we know the total cost attached to the completed units was 480,000. It was for 10,000 units. And so it's 48 per completed unit. A completed unit is $48. The closing work in progress, remember, if they're only part complete, it would only be part cost. Well, we're not asked to value it, we're told it. So the cost per unit for work in progress, well, in total they're valued at 144. Total number of units is 4,000. And so, I think it was to 36, doesn't it? 144 divided by 4. Yeah, 36. Well, why is it low? Well, as I said before, if they were 50% complete, they'll be valued at 50% the full cost. If they're 60% complete, 60% of full cost, and so on. And so, in a sense of work backwards, the amount complete, they're valued, work in progress, at 36 out of a full cost of 48, which is a percentage is how much? 75%. The answer is D. All right, number 28. Back to another statement one. Which of the following would not be expected to appear in a mission statement? Well, anything can appear in a mission statement. There's no rules. But it's a question of what would you expect or here not expect normally to appear. A, values and beliefs. You would usually expect that to appear. It's fairly standard. B, the products or services offered, value, what the organisation's doing. Yes, you would expect that to appear. And sorry, although I'm ticking them, it says which would not be expected to appear. So the answer's not A and it's not B because they would appear. C, quantified short-term targets they seek to achieve. No. No. The mission statement is a long-term thing, not quantified short-term targets. D, the major stakeholders, not always there, but quite common. Who are the main people who are interested in the organisation? And so A, B and C, you'd normally quite expect to be there. C, you certainly wouldn't expect to be there. The answer is C. 29. An organisation operates a piecework system of remuneration, but also guarantees its employees 80% of a time-based rate of pay, which is based on $20 per hour for an 8-hour working day. 3 minutes is the standard time allowed per unit of output. Piecework is paid at the rate of $18 per standard hour. If an employee produces 200 units in 8 hours on a particular day, what's the employee's gross pay for that day? And the problem here, I think, is just getting all confused by the wording. The arithmetic itself, I don't think is too hard. But let's see. First of all, forget the guarantee for the moment. On piecework, check how we work out the pay on piecework. They're paid according to how many units they produce. Well, fine, they produce 200 units. 3 minutes is the standard time allowed. And piecework's paid, instead of paying so much per unit, it's paid at $18 per standard hour. So, they should have worked, what, 600 minutes? How many hours, therefore, how many standard hours? So 600 minutes divided by 60 is 10 standard hours. And they're paid at the rate of 18 per hour. Per standard hour, it's 180. That's piecework. Or if you prefer, the amount they paid per unit comes to the same answer. Since it's $18 per hour and 3 minutes per unit, every unit should have taken them 3/60ths of an hour, on which they paid 18. So if you prefer, that's how much they paid per hour. But again, if you multiply up, it comes to 180. That's piecework, but you've also got, it says they're guaranteed some pay. Now, it would appear from questions I've been asked quite a few times on tuition, a lot of people aren't sure what that means. All guaranteed means, you see, with piecework, although here they happen to be, it comes to 180, some days they might produce more, be paid more, some days produce less and paid a lot less. Here it says whatever happens, they're guaranteed. It means a minimum amount of pay. And so the minimum, the guarantee pay they can have for the day, they're guaranteed 80% of a time-based rate of pay, which is $20 an hour for 8 hours. So they're guaranteed that they'll get 80% of the rate of pay for an 8-hour day. It's $20 an hour, 8 hours. And so they're guaranteed to get a minimum, it's my arithmetic, right? 80% of, I think it comes to 128. And so about making it clear, the guaranteed pay, the minimum they'll ever get is 128, even if they only produced 1 unit. But it is simply the minimum. And so how much they're going to get paid here? Well, piecework came to 180, it's more than the minimum, so they will get paid 180. The answer is D. But had piecework, had that calculation only come to, let's say, 120, then they'd have got 128. That's the minimum they'll ever get. Number 30. By how much was the total overhead under or over absorbed for the period? A company uses an overhead absorption rate of $3.50 per hour based on 32,000 budgeted machine hours. During the same period, the actual expenditure, 108,875, 30,000 hours were recorded on actual production. Well, to see whether we've under absorbed, we take the actual total. Actual overheads are 108,875. And we compare with the amount that's been absorbed or charged. How much will have been charged in our profit statements? Well, every actual hour, it's 30,000 hours, will have been charged at the absorption rate of $3.50. And so the amount that will have been charged in the profit statement will be 105,000. So we've absorbed 105. The actual figure, we should have charged 108. We've undercharged or underabsorbed by the difference of 3,875. Underabsorbed 3,875, the answer is A. Okay, number 31. Which of the following statements relate to management information are true? Let's run down them. Number 1, it's produced for parties external to the organisation. No. It's information produced for management who are internal, certainly not for external. 2, there's usually a legal requirement for the information to be produced. Not at all. There's no legal requirement at all. Most companies need information for management, but it's not legally required. If you look at the choices, we now know the answer, but let's just check down. Number 3, no strict rules govern the way in which the information is presented. Well, that is true. Fits in with number 2. Financial accounts, there are rules. It is legally required, but management accounts, no. It's up to us whether we present information and how we present it. And finally, number 4, it may be presented in monetary or non-monetary terms. Yes, that is true. It's not simply financial information that they need. Monetary information, non-monetary as well. Things like quality information, that sort of thing. Oh, sorry, so which is the answer? 3 and 4? B. 32. In a pie chart representing the proportion of sales made by each region, what would be the angle of the section representing market 3? Remember, a pie chart is one of these where different sections represent different things. And here, we know what the total sales were in 3 markets. Market 3 is 51,000 out of a total of 300,000. Well, the pie chart, these sections are bigger or smaller to match the proportions of the total. The total number of degrees, if you remember, for a circle is 360 degrees. And so it would be that proportion of 360. Which, I hope I'm right here, 61.2%. Yeah, here obviously they've done it to the nearest percent. The answer is C. (33). Which of the following best describes a flexible budget? Go back to the lectures if you can't remember, otherwise it's very much definitions. A budget which shows various production costs only, variable rather. No, we don't have all costs in it. B, a monthly budget which is changed to reflect the number of days in the month. It is flexing, but that's not what we regard. It's the level of activity, number of days. C, a budget which shows sales revenue and costs at different levels of activity. Yes, that's the nature of it. as opposed to the original fixed budget, which is just at the budgeted level of activity. D, a budget that's updated halfway through the year. Well, that often happens, but that certainly isn't what we call a flexible budget. So very much a definition 1. The answer is C. 34. What is the economic order quantity for the inventory item? Here there's only one, what you might, very common trick to watch out for, otherwise I'm afraid it's just calculator work. You're given the formula for the economic order quantity, square root of 2 times D times CO over CH. And what are they? Well, D, here's the bit to be careful about. It's when you're rushing, you do silly things. D is the demand per year. The question says in each 3-month period, the usage is 20,000. Well, there are 4 3-month periods in a year, so the demand per year is 80,000. CO is the order cost, straight from the question is $20. CH, the cost of holding 1 unit for a year, it's 6% of its purchase price, which the first sentence is 25. 6% of 25, I think, is 150, isn't it? 150. And as I said before, it is then just speed on your calculator. So the EOQ, 2 times 80,000 times CO20 over CH150. 2 times 80,000 times 20 divided by 150. I get 2133333 or something. If I press the square root button, I get 1460.5 to the nearest unit, 1461. They want it to the nearest unit. The answer is C. Right, finally for section A, and we've then got 70 of the marks. Number 35. Using the physical unit method for apportioning joint product costs, what was the cost value of the closing inventory of product HH? And what's happening? Oh, good heavens, I'm glad this was the last one and not the first one. 2 products, G and H, are created from a joint process. So you've got this process and outcome G and H. G can be sold immediately. H requires further work, turns it into product HH before it's in a saleable condition. The total joint processing costs are 350,000. That's the cost of producing G and H. The further processing costs of product H are 66,000. And we're told below the production of each and the closing inventories. And they want the closing inventory of HH. HH, the closing inventory, there are 30,000 units. All right, let's have a go. Part of it's easy. Anything, any HH made, it's costing that extra 66,000. But before we can deal with that, we have to split the joint costs. It says split it on physical units. Well, physical units, G, we produced for 20,000. H, well, on the information here, we must have produced whatever we ended up producing of HH, if you understand me. So we must have produced 330. So the total number of units for 2330 is 750,000. and therefore the joint cost per unit. We spent 350,000 in total. 750,000. So per unit, I get 0.466667. In addition, though, I mean, that's the cost whether it's G or H, but as far as HH is concerned, you've got the extra cost at 66,000, and we're producing how many? 330,000 again. And so the extra cost, an extra 20. And so the total cost per unit for HH is 0.666667. And now, I'm a bit worried about all those 666s, but let's see what happens. That's the production cost of HH. Whereas, though, the value of the closing inventory of HH, the closing inventory were 30,000 units. They're being valued at 0.66667. And what does it come to? How could it come to 60,000? 30,000 times 0.66667. Yep, 20,000. The answer is C. So it actually turned out to be not as bad as it looked, but again, because of time pressure, there's still a danger of getting all confused, which is why I was lucky it was at the very end. You know, if you are going to run out of time because of time pressure, you know, it's better to have lost 2 marks on that one, which would have taken, it was more worrying perhaps, than to have lost 2 marks on maybe the one before, which I think was a pretty quick one. Anyway, that's the end of section A. In the next session, we'll carry on with section B and try and sort that out.